Hi class, welcome back. I'm Matt Fisher, your accounting professor. In the previous video, if you didn't watch that, you might want to go back to that one first because we went over common stock. In this video, we're going to go over preferred stock. Preferred stock is not ownership for these individuals or businesses that own the stock, but they do have some preference over common shareholders. The most common preference that they have or special right that they might have is the preference over dividends, meaning they'll get their dividends paid first, and there's some special rules associated with dividends that we'll go over. Also, they will have special treatment in the case of liquidation. They'll get paid their money before the common shareholders get paid their money. There are more differences between the two, but those are the most common. Your textbook will explain in more detail the difference between common and preferred shares, but they are separate. The common shareholders are the shareholders that are the true owners of the corporation and have voting rights. The preferred shareholders, they don't have voting rights, all right? Now, let's take a look at what happens when we issue preferred stock. And you'll notice that this journal entry is very similar to the common stock journal entry. So let's say that we have, in our example, 100 shares that we're going to issue, and the par value is $20 per share, but they sold for $3,000. All right, so here's the journal entry. We're going to debit cash the $3,000. Our credit will be to preferred shares, $20 par value, okay? And it will be for just $2,000 because that's the par value, okay? We're selling 100 shares and the par value is $20 per share, so that's $2,000. So you can see our journal entry doesn't balance with just those two entries, so there's the third line there. We're going to have paid in capital in excess of the par value dash preferred stock for the remaining $1,000. That's the amount in excess of the par value, all right? Now, let's take a look at some of the dividend preferences that preferred shareholders might have. So first of all, we have the cumulative feature. This is when the owners have the right to current dividends and prior unpaid. So sometimes a corporation doesn't have to always pay dividends, all right? Now, preferred shareholders usually are getting their dividends every year, but they don't have to, all right? So if the corporation doesn't pay them their dividends in 1 year, then in the next year, they might owe it or they might not. If it's a cumulative dividend or they have a cumulative feature to the preferred shareholders, then they get their current year dividend and any prior dividends that they haven't been paid. They accumulate those, all right? And these prior dividends, we call that dividends in arrears, okay? So dividends in arrears are prior dividends that have not been paid. All right. If there's a non-cumulative feature, then that means they don't get paid any dividends in arrears. So they didn't get paid it, they're not going to get it. They'll only get the current dividend if it's being paid. All right. Another preference is participating. Participating preferred stock says this allows those preferred shareholders to receive their dividend and then a share of the dividend in excess of the common shareholders. All right. So if the business declares this really big dividend, then the preferred shareholders will get their part, the common shareholders will get their part, and then if this is participating, whatever's left over for participating, the preferred shareholders will get a portion of that. If it's non-participating, that excess amount will only go to the common shareholders. So that's the difference between participating and non-participating. All right, so we've gone over a few terms today. I hope these have been helpful and have explained to you more about preferred shareholders. In the next video, we're going to go over treasury stock. This is a very interesting topic. All right, so you'll want to stick around and watch that video. All right, class? Please subscribe. Hope you have a great day. Hope you're enjoying accounting.